This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit lower this morning. Some profit taking coming in after last week. We did see some new historical highs in both the S&P and in the Dow. Longer term, we feel that the main trend is still higher as interest rates are likely to remain low for a very long period of time. Also, with the pressure this morning, I think that we will probably see some recovery later this afternoon in stock indices. Over in the foreign currencies, we are seeing a little pressure in the British pound. This after a report showing factory output in the UK coming in a bit weaker than anticipated, and yet the pound only a little bit lower, holding up very well in spite of this bearish news, and that should be viewed as a sign of strength. Also, we had the euro currency a little bit lower earlier this morning, this after import and export numbers coming in on the weak side, and yet the euro now recovering, trading a little bit higher on the day. The Canadian dollar firming after building permits in Canada, coming in quite a bit stronger than anticipated. Longer term, we still feel that the dollar index is likely to work lower, even though we are hearing more talk that there could be an earlier than anticipated increase in the Fed funds rate. Still looking for lower in the yen longer term, even though the yen a little bit better today with some better than expected current account numbers. And the British pound likely to continue its bull market. This is a trend that will probably continue for a very long period of time. And interest rate markets, we are seeing treasuries performing very well today, and also yesterday there was some negative news that did not pressure the treasuries. In fact, the treasuries closing mostly higher yesterday. Follow-through gains today, even though there is quite a bit of supply, 61 billion in treasury offerings this week. So supply, obviously, which should be a bit of a negative influence, and yet treasuries performing very well today as they did yesterday. So I would look for further gains today, further gains longer term. Still thinking that this bull market is intact and the 30-year bonds will be the leader to the upside. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.